Good afternoon, everybody. It is May 17th. The markets are in the red, and we are in Tech Talk here at MarketStream.live. Welcome. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. I want to give you some context here. I think a lot of people are freaking out after what we've seen as a pretty significant pullback in the markets, but we need context now. Instead of freaking out or getting emotional, yes, the headlines are out there. Yes, there are memos. Yes, there is uncertainty, but I got to be honest with you, I don't know what's changed in the last 24 hours. We have known, seen, heard, and anticipated this for a long time. The market somewhat just basically got people complacent enough to say that it wasn't that big of a deal. And maybe it isn't. But the bottom line is that this is where you go and look at the raw numbers. You look at the visuals that you have in front of you so you can determine what the heck is actually going on rather than the rhetoric that's flying around. So in Tech Talk, what we want to do is we want to cover 5 of the major indice ETFs, the ones that track the S&P 500, the NASDAQ, the Russell 2000, the volatility index, and bonds. I'm going to go over those. We're going to look at them from a technical perspective, and then all of a sudden I'm going to give you the estimated moves for the next couple days and into and through next week. This is going to give you context on ranges that you can expect in the current trend of the market. The short-term trend right now is to the downside. Taking a look at the spiders in the S&P 500, you're clearly seeing that it opened up below its 20-day moving average. Remember how I've discussed in my events, this is the battleground. This is where the bulls are now on their heels. They have taken some big shots today. The large cap names, the Facebooks, the Googles, the Apples, the Microsofts, the Amazons. They're all these stocks, these large cap stocks, and primarily a lot of them techs, as well as finance, are on their heels. They're taking some big shots today, and they've been carrying this market, and now you see how the market reacts. I talked about this. I kind of warned everybody about this, that when you're getting a market that's basically led by few, if they stumble, the market's going to stumble. We're seeing that today. As a matter of fact, watch this 50-day moving average on the S&P 500, and specifically the spiders, at basically 236.64, right where it's trading right now. That's where the 50-day moving average is coming into play. A settlement below there means that the short and intermediate term bulls are on their heels, but we'll need a couple sessions to basically work through that and see if actually the trend is changing on the short and intermediate term. In other words, are institutions actually getting fearful of what's coming or what isn't coming, tax reform, healthcare, and so forth. And right now, if you take a look at the options are pricing in over the next 2 days that the spiders can move roughly another $2, either up or down. So that means that you could see it at either 234 and some change or back to 238 and some change. Either way, you're looking at a battleground right here in between the 20 and 50-day moving average, that green and red line. This is where the fight begins, folks. Strategically, what are you thinking? Well, if you're a bull and you continue to stay bullish, you're looking for opportunities to look at this dip, and from a high probability perspective, you're looking at strategies like selling out of the money puts, or you're looking to do in the money call spreads if you think that there could be a move to the upside after a pullback. If you're a bear, this is where you're looking to sell out of the money call premium, whether it's a credit spread or you're selling calls with the inflated implied volatility against your long holdings to generate some cost basis reduction on your stocks, or you're looking to buy in the money put spreads. Go back and check out Strategy Now on our Facebook page at MarketStream, or go to MarketStream.live. We have a ton of recordings that go over all of those strategies. Now, taking a look at the tech-heavy NASDAQ, down 2.2%. That's good for 3 points on the Qs, down at 136.52, and it's broken its 20-day moving average, but it's still above its 50-day. So it's just in the battle zone. But this is a significant test. We have not seen the Qs test this downside since April of this year. The 20-day was broken in April, but it was a grind. This is a big pullback. A lot of the big boys are starting to see some profit taking. Apple, Amazon, Google, Facebook. They're all the fangs are taking a bit of a hit today, and there could be, again, some further profit taking. Taking a look at the Dow Jones. The Dow Jones has now broken its 20 and 50-day moving averages. Folks, the bulls are on their heels at this juncture, especially after this long, drawn-out consolidation. The diamonds are trading down 312. That's good for almost 1.5% to the downside at 206.73. It's breached this support level. You got a big gap here, folks. If things get really negative, the next level of support is going to come down here at 204. That would be a couple hundred more points on the Dow Jones if you're looking at the composite. Taking a look at the IWM. This is the Russell 2000 ETF. It's down 2.42%. This has been lagging from the get-go. We saw that yesterday. It was actually the worst performing index yesterday. It challenged its 20-day but settled above it. It just cratered. It has gone through its 20 and 50-day moving average. As I had noted, this index and the stocks that represent this index, or that are represented in this index, are very sensitive to domestic issues, economy, all of the different reform bills and so forth that are sitting in Washington. This is all up for grabs at this juncture with all of these headlines and uncertainty along the lines of the Trump presidency. So we're going to watch this very closely. But the bears have clearly taken control here in the Russell 2000, which with this uncertainty, you have volatility up 38%. That's good for $4.20 at $14.80. It's gone through its 20, its 50, and its 200-day moving average. We haven't seen these levels since basically April, which was the last time that we saw a pullback of any significance for any one of these indices, and specifically for IWM and the Dow Jones. With this move in VIX, this is just going to be potentially short-lived at this juncture, but we're going to watch this very closely. TLT, this is the bond ETF. This takes a combination of the 10-year and the 30-year, the longer end of the curve. And it was basically in the battle zone here. It was bearish for a short period of time, about a week or so. And then for the last 3 sessions, it battled between that 20 and 50-day moving average. Last night, it settled above both the 20 and 50-day, but that consolidated very tight. It is springboarded. Bond prices have gone up. That means that people are moving into bond and fixed income products for safety. You're also seeing utilities along the lines with volatility products, all to the upside because there is uncertainty. There's uncertainty that the Trump agenda is actually even going to be able to be workable at this stage, and there's questions about the presidency. With that being said, the TLT is right now pricing in the potential of around an 83-cent range for the next 2 days and around $1.58 for the next 9. Volatility, if you want to get an idea of range for the next 7 days, they're pricing in about a $2.64 range, either the upside or downside. You can see it as high as 17 and some change, or as back down to 11 and some change. As far as IWM, when you look at the estimated moves right now in the options, IWM is coming in for the next couple days $1.52. You could see it at back to 137, or you could get it down into 133 and some change. And for the next 9 days, you're basically seeing a $3 range, which could get it down to 132 and some change, or back up to 138. We're going to watch that very closely. And 138 is going to be a battleground for the bulls. They got to retake that on the short end. And as I had noted in the diamonds basically have about $1.70 for the next 2 days of upside downside. You could see it back up at right around 208 in some change, or it could get down as low as 205 in some change. And again, the markets are under pressure, but with this 1-2% pullback in the overall market indices, not that this is a panic. A panic would be a 5 to 10% one-day pullback. This is something that the market is taking and trimming some of the profits that they had built into this, especially going into the Trump presidency through the first quarter, the grind. Now they're seeing some greater uncertainty. There seems to be a lot more volatility and uncertainty now, not only with the agenda, but again with the presidency. So you're seeing the markets react accordingly. Look at this prudently. Keep your powder dry. Trim your risk, and take advantage of the volatility by looking at strategies that take advantage of volatility, primarily income generating strategies where you're selling options either against your core long portfolio, in other words, your long stocks and ETFs, or if you're building a portfolio and you've been patiently waiting on the sidelines, look at critical levels. For example, on the diamonds, you're going to watch this area now between 206 and 204. This is an area that you're going to watch closely. If it pulls back and challenges these areas but then holds, this could be a prime opportunity to maybe do some put credit spreads, some in-the-money call spreads once the dust starts to settle and you start to get a better determination of what the trend shift is, whether or not this is a blip in the bull radar or if we're seeing a greater, deeper trend. All right, folks, that's it for Strategy Now. Join me at 4:30 Eastern Time. I'm going to wrap up what has been an incredibly interesting day, and I hope you will join us here at MarketStream.live. See you then.